Hey everyone, welcome back to Chipstock Investor, still Chipstock Investor Roadshow, in fact. And we're going to be talking today about Unity software.
Yeah, this recording is actually based on an article that we had out to our Semi Insider members mere hours after Roaring Kitty made his very cryptic social media post. At any rate, let's get you up to speed. This is one that we were investors in shortly after the IPO. We exited in late 2022, early 2023 to invest in chip stocks. And we're going to explain why Unity software is of interest to us once again.
Before we continue, make sure you sub to the channel, like this video, and share with your friends. We really appreciate it. And also, quick word from the sponsor of today's video, public.com. Public.com is where you can invest in everything: stocks, options, bonds, even crypto. They even offer some of the highest yields in the industry, like the bond accounts, 6% or higher yield that remains locked in even if the Fed cuts rates.
And what sets Public apart is they give you all the tools that you need to make a well-informed investment decision all in one place with built-in AI tool called Alpha. It tells you why an investment asset is moving the direction that it is so that you can actually understand what's driving your portfolio's performance. We're all about that here at CSI.
Public is FINRA registered, SIPC insured, US based company with a customer support team that actually cares. What's the bottom line? Your investments deserve a platform that takes them as seriously as you do. Fund your account in 5 minutes or less at public.com/CSI and get up to $10,000 when you transfer your old portfolio. That's public.com/CSI. Thanks, Public, for sponsoring this video. Okay, let's get back to Unity software. If you're not familiar with Unity software, Unity's core service is 3D content creation for specifically video games in the past, but they do have an expanding platform that you can use to design cars, for instance, automotive 3D vehicle design, rendering, or digital cockpit development, and also video content, like you think of ad designs or video scene rendering, even e-commerce, app development that includes 3D features. But why should we care about a small company like Unity?
Yeah, that core product is really what was our original interest when they IPO'd during that wave of IPOs during the pandemic in 2020 and 2021. And today, that is still a really, really powerful or potentially powerful investment case for Unity. One of my favorite graphics on the video game industry still is this one right here from Visual Capitalist, showing the growth of the video game industry over the decades. Pretty crazy. This is perhaps the largest entertainment industry, or at least the measurable largest entertainment industry in the world, far surpassing a movie theater, box office ticket sales. Actually, video games passed that up a long time ago. And this is the reason why Unity could be still a great investment. It's a big marketplace and it's still growing. Lots of developers out there still interested in developing games and monetizing them through outright sales of the game or monetizing them through digital ad sales.
Unity does have some significant competition, especially in 3D design tools. One company that you may think of is Activision Blizzard, which is now owned by Microsoft. And there's also point product solutions from Autodesk, Adobe, and of course, NVIDIA. But besides these companies, the independent 3D video game content suite market really boils down to just Unity and Epic Games. Epic Games is not a publicly traded company, but Tencent owns a large minority stake.
Okay, so that's the competitive landscape. It's fierce. However, Unity has carved out a niche amongst these big integrated video game developers and a lot of other 3D design tools out there. And if this was the only market Unity competed in, we actually might still be Unity shareholders today. But things got really, really messy in 2022. Let us show you why.
The first thing is this merger with ironSource. ironSource was a ad content company based out of Israel. ironSource was kind of a messy company to begin with. A lot of developers were very unhappy and blamed it for some malware that came up with Microsoft.
And the silver lining to all of this is with this messy merger that Unity did with ironSource. In the midst of this, a very small, relatively unknown company called AppLovin actually offered to merge with Unity if Unity said, we're going to scrap the deal with ironSource. Unity rebuffed that offer and said, nope, we're plowing ahead. And in November 2022, completed the merger with ironSource instead, which brings us to today. Unity not only competes on the 3D content creation engine side of things, but also in the digital ads space with in-app ad companies like AppLovin and Digital Turbine, which is another complete mess of a business these days.
And unfortunately, after this acquisition of ironSource, things just kind of went downhill from there. In fact, their Create Solutions revenue, that's the portion of the 3D content engine, it actually has decreased significantly in the last few quarters from its peak in 2023. And the Grow Solutions, that's the ad revenue, has done pretty terrible.
Yeah, you can see in this chart here, the gray bar is Unity's core solution, the 3D content subscriptions, and then Grow, the ad revenue from ironSource, as well as Unity's own ill-fated, in-house developed Grow solutions that launched in 2022 and didn't do so well before ironSource was acquired. That's in blue. So after a couple quarters of growth post ironSource, you can see, like Kasey said, kind of a bit of a decline and then stagnation the last few quarters from that segment.
However, Unity is free cash flow positive in the orange bars. Last quarter in September 2024 ended at 115 million. However, Unity not profitable. You can see their net loss is around 124 million in the last quarter.
And to make things even messier is Unity's balance sheet. So, along with the acquisition of ironSource, Unity agreed with some private equity investors that took stakes at that time to use some debt to repurchase stock. They did an accelerated repurchase agreement, and that's why you see the jump in long term debt there at the end of 2022. They took out that debt, turned around and repurchased stock, and not hard to figure out. That was a terrible use of money. Just look at a stock price performance chart over the last 2 years, and you get the idea. They should have used the proceeds from that debt somewhere else. Okay, fast forward to 2024. Unity has a new CEO. John Riccitiello was fired. They brought in someone new, one Matthew Bromberg.
Okay, Nick, tell me about Matthew Bromberg.
Yeah, we do actually have a bit of familiarity with Matthew Bromberg. So he actually has come over from Zynga. Zynga is the mobile game company that was acquired by Take-Two Interactive. We were investors in Zynga a number of years ago. Back in 2016, Zynga was still an independent business. Zynga at that time was trying to undergo its own rebound story, try to make some sort of recovery. And they hired this Frank Gabot from Electronic Arts, and he poached, among other people, Matthew Bromberg from Electronic Arts, and they orchestrated the turnaround at Zynga and ultimately got Zynga sold to Take-Two for a hefty sum over and above where Zynga was at when they took over in 2016. We made a few bucks off of that deal. So we think the hiring of Matthew Bromberg bodes well for Unity Software if they can execute something similar by refocusing on the core business and cutting, of course, obviously cutting expenses to get Unity in better financial shape as far as profit goes.
And it appears that this new CEO is doing just that. You can see one of the first things that he did was cancel the runtime fee for developers. Why is this important, Nick?
Yeah, so this runtime fee was very unpopular, to say the least. So Unity is a software tool. It's historically been a subscription-based product. And this runtime fee that was introduced by Unity and fortunately got axed by Bromberg and the new management team was basically a per download fee for any app that was made by the Unity platform. So in addition to developers having to pay for the subscription based on how many users of the Unity platform they had in their development team, Unity wanted to also charge this per app fee as well, which meant if you ended up with a viral hit for your application or for your video game, the costs would really add up very quickly.
Just as a quick side point, that fee would be in addition to the fee that the Apple App Store or Google's Play Store would take. In turn, if you have a very small game, you would essentially be making nothing.
Yeah, the costs would dramatically increase. And so that's why instead of the runtime fee, what Unity simply did was for their Unity Pro and their Unity Enterprise subscription models, they just raised the price. And this was much more palatable for developers because Unity has promised we're going to raise the price, but we are investing in new tools and new features to make life easier for you.
And then also Unity Personal, that's when you're a small game developer, that will remain free. And they doubled the current revenue and ceiling for that from 100,000 to 200,000. That means more people can use Unity absolutely free.
Yeah, fantastic. If you're an indie game developer or like a one person show and you're tinkering with a brand new app, yeah, if you're making less than $200,000 a year, Unity, including the brand new Unity 6 platform launch that just came out, is free to use. No runtime fee for your brand new video game app.
We discussed the problems with Unity, its messy start after its IPO, the reasons that we decided to sell our position in Unity. So now let's talk about what we would need to see happen with Unity for us to be interested in investing again. These are the top objectives that we see in 2025 for new management.
Yeah, the first and by far the most important, because everything else will kind of fall into line if this first bullet point is achieved. Reestablishing trust with developers, especially in the core Create platform that developers actually use to build their app and their games, but also that Grow segment, which has been an absolute mess since the ironSource merger. We're very happy with our investment in AppLovin. Obviously, we started researching AppLovin during the whole Unity ironSource AppLovin love triangle thing, I guess we can call it, that ultimately ended up in AppLovin being left on the outside looking in, but doing very well all on its lonesome. So we're not so much interested in Unity Grow as much as we are in seeing the Unity Create 3D content creation core getting stabilized and returning to growth.
The second thing, we can go back to that chart we showed you about the revenues. Both of those revenue segments for Unity have at the very best stagnated. So we definitely need to see some stabilization of those revenues and hopefully a growth pattern. Unity also needs to become profitable. They've been very unprofitable these last few quarters. So we need to see Unity go from historically unprofitable to profitable. And finally, we need to see that it can prove to be shareholder friendly. What do we mean by that, Nick?
Yeah, specifically when you mention profitability, yes, Unity is generating free cash flow. However, on a GAAP basis, those net losses are quite steep. One of the reasons for that is because of all the shareholder dilution from employee stock-based compensation. And then that debt that we showed you on the balance sheet earlier is actually convertible debt that was issued to its private equity investors. And so the end result of that dilution, you can see here in this chart, free cash flow in absolute dollars has increased the last couple of years, especially going from negative to positive. That's fantastic. But the free cash flow per share growth has been non-existent at this point, even though free cash flow is up. So this is one area where Unity's financials could use some big improvement and become more shareholder friendly.
Finally, let's close out with talking about the valuation for Unity. For price to free cash flow, you can see around 37, 38x, and on a forward-looking basis, 28x. Is that reasonable for where Unity is right now?
I would say it depends, right? We're going to need to see more than just an improvement in free cash flow. So the 1 year forward price to free cash flow multiple, of course, that's based on Wall Street's expectations. That essentially implies somewhere in the ballpark of about a 30% improvement in free cash flow in the next 12-month period. To really get some dramatic increases in free cash flow, we're going to need to see revenue return to growth as well, in addition to the profit margin expansion story kicking into gear.
I do have high hopes after considering all of this information. The new management turnaround seems really positive for Unity. So this is one that we're going to be keeping a close eye on. We haven't nibbled on this yet. We haven't re-added it to our portfolio, but we'll let our semi insiders know if we decide to do that.
Yeah, stay tuned. Check out Semi Insider, just $10 a month. We discuss all the businesses in our portfolio. We have thematic industry stock lists put together that includes which positions we own inside of those industry themes. Check it out. We think there's some unique features there. We don't provide just a simple breakdown of what our portfolio looks like, but we do reveal what it is, what's in there, and most importantly, context, the reasons why we think businesses will do well within their respective industries.
Thanks for watching this episode of Chipstock Investor. We'll see you again very soon. Make sure you hit that subscribe button.